I mean, not much news coming in for the rest of the year. Certainly the year is winding down.
Yes.
And I'm curious to know, how are you currently investing in this market as a fund manager?
As a fund manager, like you said, the year is coming to an end, but we've seen over the past several years that the end of year presents an opportunity to position yourself for the final results of the companies during the current year. So we are already taking position for next year, looking at the sectors that are doing well, and hoping that we can get in at the current low prices, and when their results are released next year, we get some of the upsides in the prices.
Right, and what forward views, are you taking for next year as a fund manager? And certainly what sectors are you looking at that will do well in 2013?
Overall, we think fixed income will slow down. There's been a lot of inflow of funds from external portfolio managers, and that has taken down the yields on the fixed income side. We think equity will be the big play for next year, and so we're looking at the equity space as overweight in our books. And within the equity space, the financials, with the banks doing close to, some of the top banks doing 100 billion local currency this year, we think that's fantastic. And then the FCMGs are also some of the areas we're looking at next year.
Right, and let's look at the equities market. You said that's where you're looking at. Year to date, 27.73%, certainly past some of our estimates. I think most people are estimating around 25%. What are your thoughts on that market's performance specifically going into next year? And certainly there's a lot of discussion about the role it's going to play in development as we go, and that's in the economy as we go into 2013.
Okay, well, two things. The market will continue to perform strongly. We believe this because yields are down on the fixed income space, so equity will get the benefit of that. We've also seen several international fund managers. A good example is the BlackRock having an ETF with several Nigerian stocks in that for the first time, the Frontier Market ETF. So we think these are indicators that there will be more interest in Nigerian equities, and so foreign investors, local investors would play more in the equity space. In terms of the market overall, we still believe locally individuals are a bit adverse to the market, so the ability to raise new funds for corporates in the market will be low next year. But in terms of price appreciation, we are very positive.
Right, and what are some of the alternative sources of investment you see in 2013? Certainly real estate is one of them. A lot of people talk about investing in the real estate market. Bond market, certainly a lot of people tend to go there. For you, where do you see investments?
Well, like we said, fixed income is slowing down because yields are down. Equity is the new play for us. Real estate is not as liquid as we've seen, but an interesting area we've seen interest picking up is the private equity space. So in the power sector, some of the new developments in telecoms and several other subsectors in the economy, we've seen private funds going into startups, going into existing companies trying to expand, and we think that will continue next year.
Right. Well, let's talk about the macro picture. Certainly, we're just discussing what's going on at the Nigerian Economic Summit. Yeah. The fact that not much implementation, even with the the power sector privatization
yes.
Going on. Going into 2013, certainly as a fund manager, what are your concerns when we look at the macroeconomic picture?
Primary concern is security, the bombings and the insecurity in the country. Government has said they will try and put that under control, and there's been an attempt to have discussions between some of those involved in this and the government. We hope that is under control. The second area of concern is the political scene. I know 2013 is a bit far, but for Nigeria it's not too far for the election issues to come up. We hope there will be stability in the macro government polity and security space. In terms of the CBN's ability to control exchange rates, interest rates, and inflation, we're extremely confident that that is in place, and the government is doing well there. We also have very good confidence in terms of fiscal discipline this year. We think the finance minister has brought some form of discipline and ability to implement government programs. So in terms of fiscal and monetary policies, we are comfortable. Security and politics, a bit on the lookout for how things would play.
But the exchange rate, like you just mentioned, the CBN is working on that, but it has been a major concern. What is your outlook for the exchange rate as we go into 2013?
We think it will be stable. Current prices we hold. One, CBN says this is its priority. Secondly, the reserves has gone up from 36 to about 44 billion. Oil prices remain high, and I think for these reasons, we think CBN will keep exchange rate stable at the current price.